All right, let's talk about something that shows up on pretty much every single payslip in the UK. But honestly, how many of us really know what it means? We are going to be cracking the code on your tax code and personal allowance for the 2025-2026 tax year.
Yeah, I'm talking about this right here. You've definitely seen it. This little jumble of numbers and a letter. It looks kind of cryptic, doesn't it? Almost like a secret password for your salary.
So what on earth does this actually mean for your money? Like, how does this little code dictate how much cash actually lands into your bank account every month? Well, that is exactly what we're going to break down today.
Okay, so to really get the code, we have to start with the concept it's built on, and that's your tax-free personal allowance. Honestly, think of this as the foundation for, well, for everything else.
The personal allowance it's basically a tax-free shield for your earnings. It's the amount of money that government says, you know what, you can make this much in a tax year before we even start asking for any income tax. It's your personal tax-free bubble.
And for the 2025/2026 tax year, this is the magic number you need to remember. £12,570. Yep, £12,570. That's the amount of your income that is completely 100% protected from tax.
So here's how that actually works in practice. Super simple. If you earn that much or less in a year, fantastic. You pay zero income tax. If you earn more, let's say you make £20,000, you're only paying tax on the bit above that £12,570. Now, there is a little catch for high earners. If you start making over 100 grand, that allowance begins to shrink. And if you're earning £125,140 or more, poof, it disappears completely.
All right, so now that we've got that foundation locked in, let's get to the main event. Let's see how that number helps us crack the code itself.
For millions and millions of us here in the UK, this is the code you're going to see on your payslip, 1257L. It's the default code for someone who's got one job and no other super complicated tax stuff going on.
And honestly, once you know the trick, reading it is incredibly simple. You ready? The number part, 1257, that's just your personal allowance of £12,570 with the last number chopped off. That's it. And the letter, L, that just confirms you're entitled to the standard tax-free allowance. See? 1257L. Easy.
Now, L is the most common for sure, but it's really useful to know what some of the other letters mean because they tell your employer a completely different story. BR means tax everything at the basic rate. That's often for a second job. D0 is the same, but for the higher rate. A K code? Not so great. That usually means you owe tax from a past year. An OT? That means you've got no personal allowance applied to that income at all.
Okay, but how do you end up with the right code in the first place? This is a huge question, especially when you're starting a new job. And that brings us to a really important form.
Right, so if you don't have a P45 from your last job to hand over to your new boss, they're going to give you something called a starter checklist. And trust me, the answers you put on this form directly decide which tax code they're going to use for you right from the get-go.
The checklist is basically asking you to pick one of 3 statements about your situation. If you choose statement A, that's because this is your very first job of the tax year. That lands you on the standard 1257L code. Statement B is the one you pick if this is your only job right now, but you've had another one since April. This puts you on 1257L, but on what's often called emergency tax for a little while. And finally, statement C is for when you've got a second job or maybe a pension. Pick that and you'll get a BR code, which taxes everything at the basic rate.
Now, a really important thing to get your head around with that emergency tax situation is what W1/M1 actually means. You'll see it on your payslip, but it's not actually part of your tax code. It's just a temporary instruction. It tells your employer to calculate your tax based only on what you earn that week or that month, not looking at the whole year. It's basically a safety net to stop you from underpaying tax while HMRC figures out all your details.
Okay, so you've learned how to decode it. You know how it gets set up. Now for the final and maybe most important step, making sure it's actually correct for you.
And you've got a few ways to do this. First, keep an eye on your postbox. HMRC will sometimes send you a P2 coding notice, which explains exactly how they calculated your code. But honestly, the easiest way these days is to just log into your personal tax account on the gov.uk website. And of course, just get into the habit of glancing at your payslip every single time you get paid. Make it a routine.
And this is probably the biggest takeaway from all of this. If you spot something that looks off, if you even suspect your code might be wrong, do not wait around. Contact HMRC immediately.
Getting it fixed quickly is so important because it means you avoid paying too much tax, or even worse, getting a surprise tax bill down the line.
So there you have it. That little code is no longer some big mystery. The real question now is, since you know how to crack the code, is your own payslip telling the right story about your money?